guys, Mike here. So another jam-packed video for you, and obviously we'll get into the charts and all that good stuff. But we're going to talk about what could be a catastrophic, like $1.4 trillion problem that just keeps lingering, and we'll get into that. Also, why you saw some stocks pop today. Obviously, the markets went green with that push at the very end and everything. And some of you guys saw in the comments going, what do you mean? Why might we get a bounce, or what's going to say this or that and the other? So I'm going to show you that, and I think that's what you saw today, and you might end up seeing it tomorrow. But I'll also show you an interview with a legend of the business where he talks about IWM or the Russell 2000, these small caps we talked about, and why you'll see really bankruptcies go up and stuff. And also you'll get a little nugget from a guy like this who's been around for decades in this business, surviving it. So starting with this problem we're talking about, and it's obviously bonds, right? I mean, look at this. Every time you don't think this chart can get any worse. 1.429 trillion in losses just sitting there, right? I mean, this chart goes all the way back before most of us were born. I mean, look at that. That's just, it's unbelievable. Every time I look at it, and again, it's one of those things that as long as we keep going the way we're going, maybe you don't see it, right? But I mean, look at the last bit of red right there. You can't even see it compared to what we're looking at now. And as long as there's not a major problem, and again, as long as the Fed keeps stepping in and they're loaning, money to these banks and everything, saying, okay, we'll just keep kind of keeping everything afloat, and they don't have to sell the bonds, which is what happened to the banks that went under earlier when they had that run put on them. I guess it could just keep getting worse, right? So it just keeps getting uglier and uglier, and we'll be okay. But this is one of those things that just sits there underneath the water, and you say, boy, if something goes wrong and they have to start selling, which of course the Fed does not want to see happen, because what are they doing? What is, not the Fed, what is the Treasury doing? They're selling billions upon billions of bonds, right, to fill back up that general account. And that's, what's the headache we got right now? The 10-year Treasury yield. The yields keep going up. What does that do for stocks? Keeps pushing them down, and they keep going higher and higher. And to me, one thing you're seeing here, just so we understand here, this is the Treasury's general account, right? And when you look to the left, you can see when they were running it down, the stock market was going woo crazy. When they run it up, obviously the stock market goes down. And so they're refilling this thing, right? And this started in May. That's when they started refilling this thing. And if you jump over and look at what's happened to the 10-year Treasury yield, what happened? Well, the yields went up. Well, why do the yields go up? Well, because it's supply and demand, right? Like, first of all, nobody wants the bonds. So they say, well, to attract them, because the government's not the biggest buyer anymore, well, we got to give them what they want, right? So as they flood the market with these bonds, the prices of the bonds go down, the yields go up, okay? So just keep that in mind. And I don't think it's a coincidence, obviously, it just started back in May, right? With the yields starting to go back up, obviously Treasury refilling it and everything. So, and they're going to continue to issue hundreds of billions of dollars in bonds every month. And so we just got to see, like, how high can these yields go? And then something else came out today. It was Moody's, right? A rating agency. And some of you guys have been talking about in this comments. So what about the government shutdown? Well, I've showed you before on the chart. There's only been 2 in the 21st century, and they didn't really affect the market that much. But now, if we get a downgrade, what do you think is going to happen? It's going to be a huge problem, right? But remember, when the issue downgrades, the worst time. So if we're in that downtrend, you could absolutely see a downgrade to it. It wouldn't be surprising, because we know these idiots in Washington are going to do what? They're going to play chicken and try to wait to the last minute. Or maybe they do shut us down. Maybe that's what happens. It'll be a partial shutdown. So again, the things that need to run are going to be running, but the market loves to make excuses, right? To do what? And guys, if you get anything out of this, please hit that like button. It helps people find this video. And if you like the content, think about hitting that subscribe button down in the bottom. To use news like that to say, oh, that's why we're selling down, because the government shut down, right? So it could absolutely happen, but a downgrade will be even worse, because Moody's the only one that actually has like a positive grade on this. And so if they're the last ones to fall and say, yeah, we're done with it, we're going to go ahead and downgrade you, then yeah, you can absolutely see another part or another reason for the market to sell down even more. And so we got to keep that in mind. So, you got strikes going all over the place. You got, obviously, we're sitting here with this government shutdown looming, which should not affect the markets. But if we get a downgrade, or the market just wants to use the news, then that's what's going to happen. So, it's kind of, you should keep all that into perspective and everything. And of course, again, the bond thing, I don't know how many trillions that thing is going to add up to be when it's all said and done. And I look at that chart, though, and it just amazes me to go back before I was born, and you don't see anything like that. I mean, I'm sure sometime in history it had to have happened, right? But that's an amazing chart to me. I mean, that may be my chart of the year, to be honest with you. Let me know what you think in the comments. Now, when it comes to indexes, obviously there was a push right at the end of the day. We ended up going green. So we went green, we went red, we stayed flat. It was just kind of like, ugh, okay. But when you look at these indexes, I'm going to make this quick because I think we'll probably get another green day tomorrow, and then people are predicting probably get more of a sell-off. But, look on basically the SPY here. I'm looking at 426s. The reason why, because you got that gap, you got that trend line right there. 200 moving up below it. Again, it's in that volume gap. So that will be the level I would start to watch right there. I think we could get a move up and then maybe a final push down. Since we are coming into usually the last week of September, early October is seasonality weakness going on there, which has played out well so far. And then when you come to Qs right here, there's a gap down, so we'll put another gap right there. We broke all those trend lines right there coming across. And again, when you look, the level here is going to be right around. I'm just looking at really a lot of confluence, right? So, when you look at that level, it coincides right there with that volume gap. It coincides with the June 2022 highs. And so it would make sense that we're, if we get the push down, that's where I think we're going to push down to. And then we pull up the moving averages, again, probably somewhere near a lot of confluence. That 200 continues to move up, depending on how long it takes to push down to that level. That would be a great place for a bounce, a great place for a buying opportunity. We're going to get that far down the Qs. That's what we're going to have to see. So just kind of keep that one on your radar. Now, looking at IWM here. Come down, filled that gap right there. Told you there's a lot of different kind of support right here, right? A lot of different volume going on there. So no surprise that we fill the gap, end up moving back up. It actually performed better than any index today because it's been basically beat down worse than any index today. Now, keep in mind, obviously, that trend line below it where we've got the other three bounces, it did hit oversold, but remember, that don't mean a whole lot because here you can see it's oversold. It gets a bounce. What happens, though? It goes and sets a new low, right? Here, it's oversold. You can come up and follow it straight up. It bounces, get a new low, right, which obviously is that trend line. And when it hit that trend line, it wasn't even oversold. Here, it gets a oversold reading, pops back up, gets a new low, right? And so maybe this is the final bounce, but again, I'm expecting that trend line to come into play. And the same thing with the MACD here. You can see this thing can move up all at once, but all you see it doing is moving up and just staying in a tight range. It's got to get above that zero line. When it gets above that zero line, that's when you see a big pop. It's going to move through one of those volume gaps. That is what's going to happen on the IWM. At least that's what's happened the last, 3 times. So it makes sense it would happen again. Now, this leads me to an interview I ran across today with Jeremy Grantham. I already showed you, for those who've been with me long enough, back in January of 2021, when I said, wow, is this the top? We're fixing to get a major crash or sell-off. He was calling a bubble then because that was all the SPACs and the penny stock mania was going on, all this crazy mess, right? And he was right. Like 2 weeks later after his interview, boom, NASDAQ just tanked, right? And so, in this interview, it's a very short clip. He's talking about, they were asking about shorting the FANG stocks, right? These Magnificent Seven stocks. And he's, of course, saying don't do it. But when you look at IWM, I believe that's what his fund has actually been short for a while now. And he explains why. It makes total sense.
They also have the highest debt they've ever had in history. Almost no earnings. Most of the time, the Russell 2000 doesn't have earnings. When you push the PE, you'll get a not applicable. I believe you get it today.
Enough of the components are negative
Enough
earnings.
of them are negative.
I think it's 60%. It's a lot.
But the point is, if you add them all up, including the negatives, collectively they have no earnings most of the time, I think, including today. So they have lousy earnings and the highest debt they've ever had. They are zombies. If we have bad economic times, they will get croaked. If we have a financial crisis, they will get croaked. You don't know how these guys will do.
Well,
they will go down a lot in the stock market, but the first excuse, some of them will bounce. You cannot go short these kind of stocks.
miracles. Shorting miracles is dangerous.
Do not go short, period, if you don't have to.
Right.
If you have a portfolio like I have, then you have to go short. You pick the safest thing to go short. You never go short individual names, and if you do, you never, ever go short that kind of individual name.
And so you can take that for what it's worth, but I mean, I know exactly what he's talking about, and especially when it comes to Apple and Microsoft and all these other stocks, right, which you've seen run up and holding up the market. You know, I mean, I don't, again, outright short stocks, I'll buy puts or whatever, but I don't outright short stocks anyway. But, you know, yeah, if there's, and that's why I keep saying, if there's going to be companies that are going to be suffering greatly, it's going to be the Russell 2000, it's going to be the IWC as well, because these high rates and a lot of these are unprofitable companies to begin with. So they're the ones filling it. They're the ones you're seeing when these bankruptcies going up. It's not these big mega caps that are going bankrupt at all because they have so much cash on hand, right? And that was actually a really good interview, by the way, because they went on to talk about, you know, why comparing the 70s and the early 2000s to today and stuff, and now these big mega caps like Apple and Microsoft, they don't really have any competition because if any small company comes along and tries to compete with them, they just buy them or they just crush them, right? Because now the government doesn't believe in monopolies anymore. And so it's not competitive like it used to be, I guess. So that was a whole different part of the interview. Now, going on to Tesla and some others here. You know, Tesla obviously got support right here when it sold down this morning, right there where it needed to. And it was good support, right? I think it was 244, I believe. And so looking at, you know, another place for a bounce or a level I'm targeting, I'll say 233-ish is definitely a good place to target. I'm going to put a trend line in there and stuff because that aligns right there with some good support, as you can see to the left, as well as that trend line. Now, a lot of stocks, 3 different stocks, big mega caps, got to bounce off this news right here. It says Amazon to invest up to $4 billion in AI startup, and it goes into talking about the chips and things like that. So NVDA rallied on it, AMD rallied on it, and you can see, I mean, right there, it's already sitting at that support level, but again, it gets its pop right there. Still got that gap above, needs to fill. And you know, when I was talking to you guys about these stocks that what could, at least short term, kind of get this market going the other way, even if it is just for 1 or 2 days. It's where a lot of these mega caps are sitting at, right? There's Amazon sitting right on the 100 moving average. 2 days in a row, it's bouncing off that 100 moving average. You go over to Tesla. What's it sitting on? Sitting right there on the 100 moving average, right? That's where it bounced today. And so, you know, you go over here to NVIDIA. What's it sitting on for 2 days straight in a row now? The 100 moving average, right? So a lot of these mega caps sitting on some major moving averages, which they tend to hold or bounce. And then you go over here to AMD, what's sitting on the 200, so it definitely doesn't want to lose that, right? The bulls for AMD do not want to lose that right there. Sitting on support, sitting on that trend line. And again, then you go into Netflix, and it's sitting on a trend line. It's been sitting there the whole year, hadn't lost it the whole year, and so almost 9 months straight. So again, 200 right below it as well. And so that's why you can see these bounces, and when you pull up the shorter term time frames, you'll see what I'm talking about with the RSI. And usually you get a bounce. Whether it's, you know, again, most of these are still in a short-term downward channel here. So keep that in mind. Now, you might notice Chinese stocks, once again, most of them took a beating, especially like BABA. Why is that? Well, of course, the cancer that keeps on giving. China, Evergrande misses another payment. This ain't the first payment they've missed, you know. And so as soon as that news hits, you're going to see Chinese stocks suffer, and that's exactly what happened as usual. I'm sure tomorrow China will come out and say they're doing more stimulus, so and we'll get a pop back up, but they're just kind of stuck right now. Now, when it comes to earnings, tomorrow we will have Cintas earnings. That's the uniform company, so we'll kind of know a little bit more about what's going on in the economy. Costco, you guys are telling me it's packed out and busy. It's one of those winners, probably just like Walmart, right? And then when it comes to economic data, you know, we have a lot of housing data, which I'm sure people will care about. Obviously, especially the S&P Shiller, you know, news. Then you have the Richmond manufacturing and services information, as well as the Dallas Fed Services Index, and revenues come out. And you'll notice a lot of that news will come out after the market's already open. So just keep that in mind if you're actually in the market making trades or whatever at 9:30, between 9:30 and 10. So when that hits, usually you see a shift and stuff. So we'll see what happens there. But again, what you're looking for are these mega caps when it comes to indexes, they're the ones holding them up. Do they break these moving averages or not? I think a lot of people are really penciling and saying a lot of these are going to go to the 200, especially the indexes. And so we'll have to see if that continues or not. The Russell looks like, when you look at, take the RSI, the MACD, everything in consideration, maybe setting up for either a short-term bounce right now. But again, we are still in this, if seasonality plays out, and that's what's been happening, we are still in this window for the next at least 7, probably to 14 days maybe of bearishness. We'll just have to see what kind of shenanigans the market makers have up their sleeves and stuff, because they were basically playing it both ways this morning. So you might see a little bit more of that and everything. I know every like Elliott wave person I like to watch, whatever, is kind of signaling a bounce up and then maybe a drop down. But the other thing to look at is what's going on with the dollar, what's going on 10-year yield. If those are breaking out, it's kind of usually a rough day or a rough sledding and stuff. So we'll see if those get rejected and finally start to cool off some. So anyway, let me know what you guys think. Please hit that like and subscribe button. Thank you for all you guys who watch and everything. Feel free to sign up for the membership, get your 7-day free trial and stuff. Go over and join us in the Discord, watch the videos, see what you think. So anyway, hope you guys have a good one, and I will see you tomorrow.